Um, you guys are very global investors, and you look at a lot of different asset classes and geographies. We heard from a lot of good funds today. And I think one big question you should be asking yourself is, why should I be focusing on Africa? It's kind of a faraway place, and maybe not a lot of people have been there. So, I should say why we're focused on Africa, and maybe it's interesting to you too. I've looked at, I used to be a global financials analyst. I've looked at European banks, Italian banks. I've analyzed stocks in the U.S., and I used to do a lot of investing in India, Middle East. And I think Africa is kind of unique for two major reasons. One, this is a continent that's got a lot of growth ahead of it. Very young population. 1 billion Africans, average age I think is below 35. Lots of new companies that are being started, new economies that are at very early stages of growth. And another thing which I think people find when they go to Africa, and we like to do investor tours to Africa, I think with this young population comes a lot of energy and a lot of excitement, and they're starting businesses, and they want to take risks, they want to grow, and it's kind of exciting when you're there, and there's a definite energy that you feel when you visit there. So maybe you could say a lot of other emerging markets have young populations, and they have a lot of growth potential as well. But there is one extra thing about Africa is it's a very inefficient, undiscovered market. Not a lot of people go to Africa. They don't understand it. They might be scared of it. It's a lot of different countries. It's very big. And so we find that, especially in the U.S., I see a lot of people are focused on China, they're focused on Asia, they're focused on South America. But when we're out traveling around into places like Mombasa or Lagos and Harare, you don't see many other European or U.S. investors. So to us, that's a good thing. So with that comes greater access to companies, ability to generate relationships. When I was a banks analyst in London, I remember I used to think I was a very special, unique analyst. And I would go to the Merrill Lynch Banks Conference, and I'd find out that there were 800 other European banks analysts in the same hotel. And I was like, oh, sheesh. So there are very few other African analysts or dedicated to Africa like us. So that gets to our last point. There's a lot fewer funds, a lot fewer institutions focused on Africa. There's a lot of global funds that will sometimes get interested in Africa for a year or so, then things turn bad, and then they don't want to go into Africa anymore. So we're dedicated, and there's less competition. Also, we're a long-short fund, and so there's very few funds that focus on actually shorting stocks in Africa as well. So maybe I've interested you in Africa, but you might say, well, why do I want the Hedge Invest Africa Fund? Africa's definitely going to be volatile. It's growing, but it's got its ups and downs. And our view is we've got a lot of our own money in the fund, and as much as possible, we want to make money through both the up cycles and the down cycles. Most Africa managers that you'll meet are long-only funds. And they take very long-term views, which is great, and we do think about the long-term as well, but there could be tremendous drawdowns while you're waiting for the upturn. And I think over the last 2 years, the African markets are down 40% in dollar terms. So that, I think we've done a good job of protecting against that over the last 2 years, the downturn. The other thing about us is we have a real commitment to the region. We've got an office in Zimbabwe. We've got guys on the ground. Our CEO, Rich Walter, beyond our UCITS fund and our hedge fund, he also has a lot of personal investments in Africa, which are not easily sold. We have farms in Zambia. We have a microfinance business. We used to have a chicken feed business. But so we're there, and we're sticking through the tough times and the good times, and I think that's unique, and when we're in Africa and we're developing relationships, the guys in the business community, they realize that we're here to stay. And I think finally, I think we have a really great team. I love our balance of Rich and his leadership and views on his global perspective and thoughts about risk and opportunities, and I always like having him come into meetings and get what he thinks. I hear it one way, I want to hear what he thinks. We've got Matt, who's grown up in the region, has all the experience of being a kid and living through everything. We've got Austin providing, we're investing in Africa, but we have top-notch SEC back office, disaster recovery, all the institutional level things you need to make sure money's safe. So to talk about performance, this chart is since we started the UCITS product in March. We ended December up about just under 3%, and subsequently the fund has been down this year, but we still outperformed the African index by 25%. I would just say the most difficult thing for us this year so far has been managing the volatility in a lot of the commodity stocks we're involved with and the currencies. So that's been part of our challenge this year. But I'll talk about that later. But I think the important thing is as I said, we're outperforming the index quite substantially. We talk about Africa, and I think it's just important to know what do we mean, what markets are we trading, where are they, how big are they? You just might like to know these things. Africa is actually 53 countries, but there are a lot fewer markets that are where we invest. So it's about 600 billion euros of market cap, or that's dollars, and half of that is in South Africa. So sometimes we get asked the question, why are you guys doing so much in South Africa? Two things. These companies are very high quality, very shareholder friendly, very first world, very liquid, great governance, and also their leaders we found. We used to not focus so much on South Africa. Then we found that in banking, insurance, supermarkets, telecoms, these South African companies are growing and acquiring and becoming the leaders in other countries like Kenya, like Nigeria. So we couldn't ignore these very well-funded guys coming in, making acquisitions, becoming the leaders in the space that, in the industries we're excited about. So, and also on the short side, South Africa is a very first world market, very well-run market and it's liquid. So if we want to express short ideas, they're often in South Africa. You also have a lot of stocks listed in London, African, usually mining or energy companies. And then the next two biggest markets are Egypt and Nigeria. And then Kenya is about $19 billion, and Zimbabwe and Ghana are both $2 billion. So that just gives you an idea of what the capital markets in Africa look like. So we're very bullish on the long-term growth of Africa, and I'll get into that more towards the end of the presentation. But the reality is some of the headwinds that have hit the rest of the emerging markets and developed markets as well are happening in Africa as well. And so our objective is, how do we make money right now? How do we deal with what the environment we've been presented with, and what are the opportunities right now to make you guys money? I don't want to be sitting here telling you about 5 years, 5-year growth story. I need to make you money with the current situation. And one of our themes that worked well for us last year has been focusing on short positions in mining, energy, and cement companies that have a lot of debt. There was a lot of expansion over the last 5 or 6 years, a lot of optimism, a lot of debt accumulated, big projects, and now as the commodity prices have come down, cement prices come down, real estate markets are slowing. You're finding a lot of companies that expanded too much, they got too much debt, and they're in a very dangerous position if these commodity prices continue. I think this is one of the biggest things that interest me, and we've done a lot of work on this, and our view is that these commodity prices are going to stay low. Demand is very weak. Capacity in many things is still growing. Iron ore, for example, there'll be 10% growth of supply over the next 3 years. I know the iron ore prices come down, but debt markets are very cheap. These companies can still get access to capital, and these projects are still being completed. So it's a bit like a train. There's still more and more mines being completed for the next 3 years, even though in things like iron ore, the demand has actually turned negative. Steel demand has turned negative for the last year and a half. Cement in Africa, it's another one. It's a very exciting story. Cement, Africans are urbanizing. They're moving into the cities, and they will need more cement. And there is a tremendous potential, but unfortunately, the cement companies also got really excited about this opportunity, and they built a whole lot of cement factories all over across Africa. So between 2014 and 2018, the supply of cement is going to double from 60 million tons to 120. And when you look into South Africa, Nigeria, Kenya, you're seeing cement demand about 1-2%. So it's far below the capacity, that's the growth in capacity. So you get a lot of pricing pressure and price wars, which is negative for margins. The next theme that we're focused on is, commodities worked really well last year, and they've been difficult. Our positions in commodities and energy and mining have been difficult for us this year, but I think they will. We've gone through these types of times before, and I think we'll come out well through the end of the year. But the next thing is this real cutback in activity, the cutback in CapEx, laying people off, less investment, is starting to follow through into the rest of the economy, like South Africa. So we're really, you're getting, in South Africa, you have very low growth and very high inflation because the currency's been weak. So you're seeing the consumers under a lot of difficulties. You have rising food prices, rising electricity prices, rising interest rates, rising taxes because the government is having a problem with its budget. And so it's starting to put a lot of pressure on the consumer. He's having a hard time dealing with all these things. So we're following into looking at how this is going to stress the banks. The banks in South Africa have historically low loan loss rates. And I think we've done work on the many cycles, and we're at the very low end of the cycle right now. And I think from everything we're seeing, there's no reason to expect this. We can't go back to close to the highs in terms of loan losses. Other sectors like telecoms and gaming, you're seeing actually this stress on the consumer is affecting their spend, even on data, on their phones, on gambling. There's some gambling stocks in South Africa. So those are some of the short positions. On the long side, we're focused on what kind of companies can grow even in a really difficult environment. And we found some positions. There's a telecom company who focuses on mobile payments, Africans paying each other with their phones, not using cash, not using the banks, transmitting their payments directly over the phones. That's been a big growth trend in Africa. We have an investment in a gas station company in Kenya with 400 gas stations across Africa. We're actually benefiting from low oil prices and finding ways to pay down debt, renting out the real estate of the gas stations to fast food chains. So they're finding ways to grow earnings. And finally, a stock I like is the Johannesburg Stock Exchange, which is benefiting from the volatility, and they're launching new derivatives products to Africa. These are derivatives products which you're used to having in the US, being able to hedge interest rates, being able to hedge currencies, being able to hedge commodities, but it's kind of new to Africa and it's developing. And so the Johannesburg Stock Exchange is kind of becoming the New York Stock Exchange of Africa. You see a lot of companies wanting to list on the Johannesburg Stock Exchange as well. So I think it's a growth industry. I liked this chart because of what I was saying earlier. It just illustrates what I think is the issues in the mining sector just moving into other sectors of the economy, especially in South Africa. But I think we don't want to lose track of why we're in Africa and the exciting stuff that we think is still to come. And I've looked at, as I said, I've looked at a lot of other markets, and I think there's a reason why Africa can grow when places like Japan and maybe the developed markets are going to have a hard time growing, even China. You have this very young population of Africans. They're young, they want to succeed, they want to get educated, they're very ambitious, and I think that's a very good driver of growth. People talk about the lack of infrastructure in Africa. Oh, roads are awful, there's no trains, there's no ports. The thing is, there's a lot of investment underway. Last year it was $75 billion. It's trains, ports, new railroads, roads, fiber optic cable, and it's happening all across Africa. And these are just slow-moving things, but when you start to have more infrastructure, the economy can diversify, guys can start new businesses, and the cost of doing business, the cost of trade comes down, which is very good for growth. So this is, I think this is one of these things, like the development of infrastructure in Africa. It's like an opportunity that you haven't seen since the 1950s in the US and Italy, or Europe. The other thing is we're also at a super low penetration rates. There's very low use of insurance, very low banking penetration, and especially in financial services. I just look at these things and I go, wow, these banks, these insurance companies could grow many times in the future. We could have 200, 300% growth in these industries in Africa. One thing is I used to look at insurance companies and I like them a lot. People think it's weird, but when I talk to Africans, I go, wow, I get excited about insurance companies. And they go, they understand banks, they understand you need to borrow money to do things, but they don't get really insurance. They go, well, why do I need to insure against a disaster? Isn't that mean I'm kind of predicting something's going to happen? Isn't that bad luck? And I go, oh. So a lot of Africans don't see why they would need insurance for anything. And I just think, well, as you keep borrowing more and more money from the bank, and you borrow to buy that car, you borrow to buy a house, you'll have to get insurance for all those things that you borrowed against. So it's interesting. It's weird where you go to a continent and there's just that kind of misperception about the growth of a sector. Also, what I think is exciting is when Africa does eventually turn, we see that not many people are focused on it. We meet people in the US, we meet people in Europe, and very few people are going to Africa looking at the opportunities. And so when I think we do get to a bottom, I think most people are going to miss it. And so I think that's another exciting thing about Africa. So I threw in a few slides just at the end just to talk about, maybe illustrate some things we're excited about longer term. And this is just about the growth of cities in Africa. These are enormous. These are some of the biggest, fastest growing cities in the world. I'm sure nobody's been to Kinshasa. 8.5 million people going to 14. We go to Lagos and it's 10 million people going to probably 19 million people. I've said this before, but there are only 4 business hotels in Lagos, which I think is incredible. So I think there's a real opportunity for commercial real estate in Africa, from hotels, office buildings, shopping malls. And Africans want, the very few malls that there are in Africa are very crowded and people very excited to go to an air-conditioned, clean shopping center, and they like to hang out in them. So I think they're very popular. Talking about infrastructure, we can talk about numbers and I can say it's happening, but I think it's cool to see pictures. And this is a $4 billion railroad that's being built by the Chinese from the port of Mombasa to Nairobi. And if you've ever driven around Nairobi or around Mombasa, it's awful. There are trucks, everything, about 95% of the containers are moved by truck on 2-lane roads. The taxis will try and drive up the dirt on the side to get around the trucks. It's it's chaos. So this is the first new railroad to be built in Kenya since 1924. The last railroad was built by the English. So this is I think is the kind of changes and big things that are happening in Africa now, and it should be completed by 2017, so next year. I thought this is this is big to us, but maybe people don't know about it. It's the Chinese One Belt, One Road policy. And I have no idea if that means something in Chinese. In English, I don't know what One Belt, One Road means. But, so I don't understand what the title means. But the policy is to open up markets in Africa and the Middle East to China. So they are building railroads, ports, airports as well, to basically allow China to export, to connect with these other markets in the Middle East and India and Africa, and also for these markets to import into China. So they're developing new trading lanes. Some people call this the new Silk Road. But if you look at the map of Africa, there's a railroad right here in Ethiopia. That railroad's completed. I showed you, if you can see, the one in Kenya. This one's under construction. There's another one in Tanzania they're working on. These things are starting to happen, and they're more than dots on the map. It's trying to show there are real changes happening, and what's useful is the Chinese are able to do something that's been very difficult in the past, in that they're financing very expensive long-term projects and bringing in the construction companies and the engineers to get them done. And there's a lot of criticism that they're using their own construction companies, but on the positive side, they are getting these things done. Whereas sometimes in the past, there's been just things have been very delayed and slow in Africa. These projects are all happening. So, just a summary on the fund. We're bullish on Africa, and I think it's exciting. And we just got back from a trip to Africa, and I've spent, I think, most of the year there so far. But it is going to have big ups and downs. And I think we all want to be positive, but I think we all have to be realistic that sometimes the down periods can last several years. And I think we're in one of those, maybe a bit of a we're in a difficult moment right now that we have to be realistic about. But as far as the fund's concerned, we're intent on making positive returns every year. And we've had a bad start to the year, and it's been frustrating, and it's been very volatile, and a lot of unexpected things have happened. But we've done a lot of work on what we're doing and why, and I'm quite confident that what our views of things are going to prevail through the end of the year, and we're going to have a much improved performance. And then, just to finish up, so I thought we'd share a couple pictures from our trip. So this is a visit we made to a South African cement company. And it's actually, so it was a visit we were learning about the South African cement market, which wasn't actually a very positive meeting, but it was a good picture. This is when on the second part of our trip, we went to Zimbabwe and met an interesting food conglomerate that's at a very cheap valuation, and we took a picture outside their office as well. So thank you very much for listening.
Thank you, Erik. Really impressive presentation. Now, a couple of questions from the audience. First, what's the main difference in your view between investing in Africa and in the other emerging markets?
I think I was listening to Mark Chapman's presentation earlier, and I was very impressed. It was it's 4,000 stocks, and you'd always find something. I think he said, look, I do a very good job of not thinking about the macro, and it's very company specific. I think we do a lot of bottom-up work. We meet all our companies, but we do in Africa. You do have to be careful. You do have to be aware of the macro tailwinds or headwinds, because they can have a big effect on the currency and the general economy. And that's something that we're careful about as well. So we do the bottom-up work, but we also try to be very careful about what the overall economy is doing. So I think that's maybe something you have to be more aware of in an emerging market versus a very diverse developed market.
Talking about the macro impact, is the question, do you think that the China slowdown will impact the growth of African economies?
2 years ago, the view was that it wouldn't impact Africa, but it has, is the answer. It has affected, the slowdown in commodities has affected a lot of these countries. But I think what's interesting is, I think as we go forward, we're going to see less of an impact. I think we're seeing about the maximum impact now. And I think as we develop more infrastructure, as different companies start to evolve and they focus more on consumers and banking and insurance, I think the China impact will lessen in the future. So I think it'll be actually a much more interesting market to invest in the future.
Well, talking about the northern part of Africa, the conflicts we're telling every day and the ISIS threat and the instability from a political standpoint, are they affecting, or what the impact will be on the management of the fund, performance of the fund?
What's the terrorist effect on?
The Libya situation, for example, the contagion of the ISIS presence in the northern part of Africa, and which is a threat for the stability also of Morocco, Tunisia, and all the important countries.
I was in Egypt in January, and you're definitely seeing an impact on tourism. The Egyptian economy has more, other things going on besides tourism, but you're definitely seeing a lack of tourism, and then a little bit follow on. You're seeing people reluctant to go there, which just kind of makes things difficult. When investors are scared to go to a place, it tends to slow down the investment into that country. But I was there in Egypt, and there are lots of great companies. Medical laboratory company I met, telecoms. There's a lot of good companies in Egypt. There's a lot of stuff going on there, and it actually might be an opportunity, I think, at some point, because people aren't going there, and we are. So I think we might find some opportunities.
Yeah, we shall see. As Italian, we do have quite a big issue currently.
Yes.
And there's another question, and it's about the fund performance. How would you explain and characterize the main impact or factors of impact on the performance year to date, and how do you see the rest of the year?
Yeah, we've suffered from our short positions in some of the African mining and African energy companies, as well as a little bit on the strengthening of the South African rand. But we see this happen periodically. You get an excitement about, you get a reaction to maybe the Fed not raising rates, and people change their positioning. But what I see happen is, with time, it all kind of, the fundamentals reassert themselves. And so I think what we're seeing right now is, I think the negative performance we've had is going to reverse, and we'll see a big improvement through the rest of the year.
All right,
Thank
Erik,
you.
thanks again. Grazie Erik, a tutto il team di Africa Opportunities, grazie anche a voi per tutte le domande e la partecipazione, a Alessandra Elisabetta Manuli, a J-Invest per questo incontro di questa mattina. Speriamo di avervi fornito elementi utili per i vostri investimenti e per guardare al resto dell'anno. Ancora buona giornata a tutti. Grazie.